Welcome to Stifel's Sightlines podcast, focusing each week on a topic or two important to investors. Well, greetings and welcome to the Sightlines podcast. This is Michael O'Keefe, Stifel's Chief Investment Officer. Well, I'm going to dedicate this episode to basically recapping the results of the 2024 U.S. elections and talk a little bit about the implications as we go forward in terms of the economy and markets. And I will mention as well that by the time this airs, we should have a replay up of a webinar I'm doing with Brian Gardner, Stifel's Chief Washington Policy Strategist. So if you go to stifelinsights.com, you can actually check out a replay link to that webinar that we'll hold shortly. In any event, let's jump into it. So, anybody that has any exposure to any media knows that Republicans won big in the 2024 U.S. election, starting with Donald Trump. So it's the second time that an individual won non-consecutive presidential elections. And the last one was Grover Cleveland back in the 1890s. He won his second election. In any event, it was a decisive win for President Trump. So far, the Electoral College count, he's at 295, but with a couple of swing states still to be counted, that could go up to 312. So it was a decisive victory for President Trump. And actually, he won the popular vote by the current count of 51% versus 48% for Vice President Kamala Harris. And that's the first time a Republican has won the popular vote since 2004. So again, decisive victory for President Trump. Now, we had talked a bit about in the past surveys that we knew about voters, what people were listing as their most important issue. And of course, in the wake of the voting, there were exit polls being done of voters and what they cared about and wanted to focus on. And so both of those sources, surveys pre-election, exit polls post-election, focused a lot on the economy. So still basically the number one issue that people mentioned, immigration was also up there. And then in the exit polls, I think a common question to ask is whether a person's better or worse off than 4 years ago. And basically by one survey, exit poll, it was 46% saying that they were worse off than 4 years ago. So that's sort of the issues that people had in focus when it all came down to it, and probably contributed to Trump's decisive win. Now, that carried the Republicans to regain control of the Senate. So far, the party has won contests that bring their seat total to 52. There's at least a couple more seats still to be determined, so that majority could go up a little bit. But again, they'll have control of the Senate. And then right now, Democrats are trailing Republicans for the House of Representatives. The numbers I see right now, the Republicans have secured 206 seats, Democrats 191. But the bottom line is there's still a number more to go. It's a little bit of a unclear. It's sort of a toss-up at this point as to whether Republicans will also take control of the House. But by the way, Brian Gardner, who I mentioned, Stifel's Washington Policy Strategist, basically has said he believes it will go Republican. So we'll see how that unfolds in the coming days. Now, obviously, if Republicans do take the House as well, then we have, quote unquote, unified government rather than divided government. And then at some level, Republicans can get through a little bit more of the things that they want to accomplish while in office. So turning to the markets, let's talk first about how the markets responded the day after the election. So it was actually quite a dramatic response. We saw the financials and the industrial sectors go up a bit. Financials were up 6.1%. Industrials were up 3.9%. When we look to more broad indices, the S&P 500 rose 2.5%. The Dow Jones Industrial Average was up 3.6%, and NASDAQ, that tech-oriented index, was up 3%, with finally the small-cap Bloomberg 2000 index returning 5.7% for the day. So just a generally positive market reaction with a bit of focus on essentially areas of the market that are sort of economically sensitive. Now, with that, actually, we also saw the 10-year Treasury yield rise a bit to 4.44% the day after the election. And people were quickly asking, well, what's that about? And, the punchline is we think the higher rate reflects, number one, the potential for stronger economic growth. Number two, some risk of higher inflation. Number three, I would say, is given the expectation of this being supportive to the economy, maybe the Fed can slow down its rate cut efforts, given, in theory, the economy could be a little bit stronger. And they want to make sure not to see inflation kick up. So that'll be a sort of a factor. And then finally, we do have to be now refocusing on the U.S. fiscal trajectory, which we've talked about, which means, hey, we've been spending at a deficit, building up the debt, and there's a point at which essentially investors in Treasury bonds will demand higher yields for, what feels like the risk of a slight credit erosion in government debt. And so again, that's incremental, and that's probably a little bit more long-term, but it's definitely in focus. So that all translates to, okay, when we look forward, what are the kinds of things we're going to be keeping an eye out for? Number one, it would be deregulation. So think financials, technology, oil and gas, sort of Trump potentially undoing some of the regulations that have been put in place that would sort of unleash the potential for stronger business results. As I mentioned, we hope that the new administration focuses in on spending. Trump has talked about doing that. He hasn't talked about it so much around the debt, but I would hope that as they dig into spending, that what comes into further focus then is the deficit and the debt, and maybe a little bit more austerity towards trying to rein that in. And then finally, we're going to keep an eye on things like the cabinet appointments. We're going to keep an eye on any kind of engagement with the Fed and how the Fed actually just by itself independently reacts to the elections. So we have a Fed meeting this week, and we'll learn a little bit more there. And so again, those are some of the things we're keeping a close eye on and sort of analyzing as we look forward, engaging with clients, and of course investing. So again, just to recap, big week for Republicans with the U.S. 2024 elections. Still a little bit more to learn in terms of the House, but a strong outcome nonetheless for that party. It does translate to sort of shifts like deregulation that will probably be a little bit more business friendly, which just in general is a little bit more supportive of the equity market. So anyway, that's what we wanted to kind of capture in a brief amount of time. A lot going on. Thank you so much for listening, and we will catch you on the next episode. Thanks again for listening to Stifel's Sightlines. Be sure to subscribe wherever you're listening to automatically receive each week's podcast in your feed.